Hello, fellow traders. 'Tis I, the Rumpled One, coming to you with another trading video. I was looking out on various forums to see if there was anybody that agreed with me. I figured I couldn't be the only one. I probably am not the first one to realize the fallacy, the myths, the BS that's being propagated out there. Lo and behold, I found somebody who agreed with me. So today's video is going to be about Traders Mind. Many of you may know my favorite movie of all time is Cool Hand Luke, because the captain said he has to get his mind right. And as a trader, you have to get your mind right, because if you don't, you're just destined to doom. Now, if you've watched some of my other videos that don't have anything to do with trading, in fact, I just put one out there, a book review on the power of habit, because the problem with traders is they have bad habits, as I mentioned in my video about consistency. Let me quote from the book The Power of Habit off of page 270. Quote, "For Aristotle, habits reign supreme. The behaviors that occur unthinkingly are the evidence of our truest selves," he said. So, just as a piece of land has to be prepared beforehand if it is to nourish the seed, so the mind of the pupil has to be prepared in its habits if it is to enjoy and dislike the right things. Let me paraphrase that to say, so that the mind of the trader has to be prepared in its habits if it is to enjoy the profits and dislike the losses. You see, you have to get your mind right. You have to get things that are wrong, inaccurate, unprofitable out of your mind. It's that simple. You will not be successful if you hold on to those things which are not true. As I mentioned earlier, I found somebody else on the internet who has a large following on one of the forums. And so I copy and pasted a few things. And he's talking about the problem with some people and some professional technical analysts today is that they use technical studies as if it were the holy grail of trading and their pathway to the millions. That's up here at the top. But right here is the main thing. I put it to you that to consider your technical studies to be more than what they are is a fallacy in trading the markets. Not so unlike Martingale's gambler's fallacy, it can lead you to a very dark place. He goes on to say, what many traders do not know or may fail to recognize is that your success in taming the markets is comprised of a mix of ingredients, not so unlike in baking cakes. He suggests three very important ingredients: market structure, you, and capitalization. So you see, somebody else out there realizes the fallacy of the squiggly lines. He went on to say that he uses daily charts and he also uses hourly charts. But I would say I disagree, because it's all the same data, it's just how much you compress it. And some people seem to think that if you're unprofitable on a 5-minute chart, by looking at the 60-minute chart, somehow you can take that unprofitable trade and turn it to a profitable trade, which boggles my mind. But one of the things I like what he says is it's right here. It's funny because many of you know I consider myself a rat, because in a study the rats beat the Yale students. Well, he says right here. So if this market continues to go up, then you miss the bus going north. Why? Because you were waiting at the bus stand for the south bus. And so he says, bulls make money, bears make money, pigs get slaughtered. See, when bulls are making money, bears are not. So when green rats are making money, red rats are not. And when the bulls are making money, bulls cannot. So when the red rats are making money, the green rats can't. But the ones who try to catch both buses will sooner be dead, crossing the road from one bus stand to another. Because he could be at the north stand when the south bus comes, or the south stand when the north bus comes, or mostly in the middle of the road when both buses come. That makes me laugh, only because it's somebody else saying exactly what I'm saying in a slightly different method. But the part that makes me laugh is how much abuse I get versus the praise he gets. Maybe it's just a matter of style and taste. I'm not sure. But let's move on. I'm going to explain something to you here about getting your mind right. Of course, I'm going to use horizontal lines to explain it, because to me it's very, very, very simple. Think about the buses again, the south bus and the north bus. We're going to look at the 1 hour chart for now. And this is the pound dollar today. We had this long spike down. You see it cross these lines here? Everybody see that? Good. Let's go out to a 1 minute chart. Okay, so can we all agree that spike was this? Now, we've got the sweet spots gold indicator set up here, indicator list, sweet spots gold I modified, and all these are free indicators, no donations. So, if you're trading the pound dollar and all of a sudden you see it drop from this area to this area, it's going south. That's the south bus. And the bus keeps going south and it keeps going south. But as you can see, it never left this station. So, the simple thing to do is, now it's going north, you enter the trade going north. If it comes down to here, you stop out. And as you can see, it'd be a successful trade, because that was taking a bounce extreme. In other words, we were going to go off that low. See, this is a 1 minute range. We can switch this over simply, chart period, 1440 minutes in a day. Oh, we don't have the range. Well, let's not worry about that for the moment. And as you can see, it went up, you would have made a profit. And here, it tested down, and let's say you took that trade. Well, it didn't hit the stop, you would have made money again. Now, I know, going to accuse me of cherry picking, so let's just go across a bunch of pairs. Same thing here, down, up, now, down, up. You could have taken profit off the table by just using horizontal lines. Let's move over to the Swiss franc. Once again, these are set at 10 pip increments. You see it came down, crossed up, you got in there, and it did the exact same thing. Look at the yen. It came down, didn't hit this line, so it crossed that line. So what you're looking at is it comes down and crosses the line. Now you say, well, what happens if you do this right here? Well, you would have stopped out. That's trading. But just because it doesn't work one time doesn't mean it's not going to work the next time. So see here, it came down, it goes up. Okay, dollar Canadian. Here we go. It came down here, didn't cross this line, turned around, bus is heading north. You could have gotten out with a 10 pip or more profit. Same here, Could have taken a 5-pip profit. Here, another 5-pip profit. Small wins, but wins. Let's look at the euro yen. The same thing. Here, it went through, crossed over, back up, win. Here, win. As you can see, very simple. M1 charts, I'm going across the board here. I can't, if you want to accuse me of cherry picking, go ahead, but when I go through, a handful or more currencies, it's kind of hard to call it cherry picking. Right here, he's coming down. What do? You go long. You could have had a 10-pip profit. So the thing is, what you want to do is use your eyes. And a lot of times it's a lot easier if you look at a daily chart. Let's make it nice and wide here. But the thing is, with this particular indicator, my version, I've got it on automatic. Let me turn it off. We can go back to those 10-pip. Because usually on a daily chart, I don't want them spaced at 10 because it looks like that. But you can see once again, it's the same idea. You can see here, when in this case, the pound yen dropped in this zone, say, okay, it dropped here. It hasn't been in this level for a while. So when it crosses back to the upside, you probably have a good chance of making a profit. Very simple. So once again, simple indicators, and I'm wondering if something, maybe I've got a problem with the range gauge. Because I was converting it to build 600, and I think I might have had a problem here. But anyway, you can see now close low 46 pips. So if you got in somewhere down here, let's look at the H1. You could have gone all the way up. So as you can see, once again, no fallacies, no cherry picking. It's very simple. The bus is heading south and then stops and then it goes north. Get on the north bus. If the bus is heading north and decides to go south, get on the south bus. Or just stay on one if you're a Yale student, or you can just pick one bus and trade it. But look to trade off of bottoms. Now, or if you don't believe in what I've taught, you can go back and use these squigglies. I don't know why you'd want to, because every time you change time frames, you can see how things change. Doesn't make any sense to me. Why somebody would want to use something like this, but they're out there. And maybe that's the problem why people take shots at me, because I kind of make fun of him, where the other guy just states his claim. He makes fun of him too, but I guess he's not as hard about it. So fellow traders, I hope you've learned something. Once again, it's very simple. Let's get your mind right. Get those fallacies out. We need to eradicate them. Technical indicators, pretty much for the birds. You don't need them. Horizontal lines, they stay the same, and it's very simple to see. Price crosses a line, that's direction price is going. And all this talk about major trends and minor trends and counter trends, to me, it's all baloney. Because price is the same on all time frames. It's that simple. And you can't turn a loser on one time frame to a winner on another just by switching time frames. Get that fallacy out of your mind. Because traders, remember, it's not what you trade, it's how you trade it.